everybody, welcome to Trader Merlin Show. I finally got it fixed. A big shout out to my friend Michael who helped me adjust the lighting, fix the camera, my settings changed and everything. I should look nice and crisp and not blurry. I don't know what was going on here. Gremlins in my computer, things just being wonky over here, I guess, is the term we'll use. So thank you all for letting me know I had issues, and thanks Michael again for fixing it, making me look like, well, not $1 million, but maybe $150. Good to see you, John, Thomasina, Lisa, Giselle. Good to see you. Hope NorCal's doing well today. Farm Bees as well. We had a question. I think it was from Oliver. I'm not sure. I think it was from Oliver here, who's been one of the regulars on the program, and he was asking me about window dressing. So that's what I wanted to kind of get into today, which was it's a topic that, I'll be honest, as a trader, I don't really care about, and I'll explain why it doesn't make a difference to me, but as an investor, I think it does make a difference. So the picture here, as we got a nice little piglet over here, and I have, I guess, some lipstick being put on that pig. I wanted to use that analogy because they say if you put lipstick on a pig, it's still a pig, right? Well, in this example, let's explain what window dressing is. So window dressing can come in a lot of different forms. The way that Oliver was questioning it really is more about the games that fund managers will play with their portfolios to make themselves look better. So for example, let's say we have a security that's been just tumbling down, like SMCI, right? Man, lucky got out of that one yesterday. SMCI looking really bad today, but let's go SMCI. As you can see here on Super Microcomputer, down another 11% today. I mean, this thing is probably going to continue to go lower. My guess is it'll get delisted and it'll probably drop down into the single digits here soon. If you're a fund manager and you've had this on your books for, let's say, 6-8 months, you have a horrible position on your portfolio. This is a black eye on your investment portfolio. So depending on where you are in your quarter, right? Typically this is going to happen around the end of the quarter where these funds will do this, is they will sell their garbage, trash, losing positions and get out of this bad stuff and move themselves into a winning position. Something like, well, let's go NVIDIA, right? Because NVIDIA has had such a great run. It's still trending upwards. Even with today's down move in the markets, it barely budged, still holding this kind of high tight flag pattern that you see on your screen. So ultimately what it boils down to is magic. Because when they finally do report, when you look through a prospectus, you go, oh, what are they holding? Oh, they've got NVIDIA. They're holding some good companies. Yeah, the rate of return may have not have been that great, but they're in the right things. They're doing good things. Well, what they've done is they've just dumped all the garbage they didn't want you to see and, made it look all nice for it. It's kind of like, for those of you who are messy, I'm not calling any names here, but for those of you who are really messy and you have family or friends coming over for dinner, all of a sudden you do everything you can to make your house look spotless, right? You're out there with Windex, getting the windows that haven't been cleaned since the 70s, you're vacuuming, you're disinfecting everything, and then for the next 6 months after they leave, you don't clean anything. Window dressing is basically that. It's saying once a quarter, when these companies report and have to show their holdings to investors, they're saying, get rid of all that bad stuff so we don't look stupid for holding Super Microcomputer or some other stock that's absolutely tanked. And then shame on people who don't look like their quarterly statements incorporate. Yeah, well, I'm with you, Lisa. But remember, my attitude about this entire financial system, I'm talking from top to bottom, is that it's magic. It's smoke and mirrors in many cases. It's making you believe one thing, but something else is actually happening. Particularly when you look at investment portfolios. You look at some of these rates of return for mutual funds or an ETF or some private venture fund. They're going to give you, here's our performance over the last year. Here's our performance over the last 6 years, 10 years, whatever. Those numbers may be manipulated. And it comes in the form of window dressing. Now, the performance isn't going to get manipulated, right? That is going to say they actually did perform this well or this poorly. But it's the illusion of what they were holding that I think is disingenuous. So yeah, I'm with you, Lisa. I always tell people that you need to believe that this market is one gigantic lying entity. They're lying on mainstream TV. They're lying on balance sheets. They're lying on incomes. They're lying on the data that we get. And I think the question that most people are asking is, well, then how the hell can we trust anything that comes out of the market? You can't. I personally have tried to simplify my perspective of things and not get so caught up on the macro and really just focus on, well, I guess I do look at macro, but I really like to focus primarily on charts. I think that this is much easier for me to gain an understanding of what's going on. I'm not smart enough to look through a company's balance sheets and break it apart and understand everything that's in there, even if it was 100% truthful. A good example of that might be a company that reported earnings today, right? We've got Disney reporting earnings today. I love this graphic that Midjourney created for me, and basically it's got Mickey Mouse on a boat here without any oars, and he's just kind of floating. Well, Disney, I think, is a similar situation because right now Disney is looking for a succession, right? Bob Iger is going to retire here next year, December, at the end of 2026. We got 2 years left of Iger running the show over there at Disney. But, my graphic I thought was pretty good in creating that. He's all happy, but there still are some problems over there at Disney. Now, they reported earnings. Great. Fantastic. What did Disney's earnings look like? Well, they were pretty good. We'll go here to the basic numbers, and you can see here that on their estimates, they were supposed to report $1.09. They came out at $1.14, so they beat by 5 cents. Great. They were up 6.23% today. All right, fine. Now, what I don't do, and I know some of you do. I know some of you do look into the nitty-gritty details, and that's great. Good for you. We all have our area of expertise. Even with a finance degree and understanding financial ratios and all of the numerics, term I just made up, all the numbers that go behind the scene of a financial statement, I used to know all that stuff. Now, I just don't care. Because when WorldCom happened and Enron happened when I was in college, I realized that they could be lying to you, and by the time we figure out that they're lying, all the damage has already been done. You, the investor, is going to be left holding the bag, and you're like, oh, shoot, well, I have no recourse. I was just subject to this fraud that went on, and that could be super microcomputer at this moment in time. So I don't look at Disney's price financials and get overly worked up that they beat earnings. Great, that's fine, good for them. I'm looking at it more of what's the price chart telling me. So let's real quickly take a look at Disney here. And I'm going back into 2017. All in all, I think we would agree that if you look at this price chart, not a lot of positive can be said about Disney. Now, granted, the last couple of months, really since the early August, it's been beautiful. It finally broke its downtrend. I would argue it broke its downtrend back in September as it started to make a swing high, kind of make a new high and a higher low. So great. That's where everything kind of changed momentum. Now we're making higher highs, higher lows. The trend looks great at this point. That said, we have closed this gap. There was a giant gap from May 6th to May 7th of this year, where it came in an earnings announcement, gapped down big, and just sold off from there, really plummeted from there. Well, we finally closed that gap, and now we're left with this. This is the Halley Comet of shooting stars. You guys all know I love shooting stars. It's one of my favorite formations. And even though Disney beat earnings, and even though they said they had some very positive comments on their earnings call, one of the things I found interesting was they asked about what are you looking at? I think it was Iger that was talking about it. It said, what are you looking at from a merger acquisition perspective, right? You've got cash. What are you going to buy? And he goes, we got plenty of assets. We're not looking to buy anything else. And I think that's been kind of the theme for a lot of these entertainment companies is, let's not buy anything more. We've bought a whole bunch of stuff. Let's figure out what we're going to do with all these assets we have. So even though Disney beat earnings, even though their comments were rather positive, I'm looking at this from a pure technical perspective. And what do you think I'm thinking? I think the viewers out there who watch this program with regularity, you know what I'm thinking. I'm looking at this as a potential short opportunity tomorrow. Why? Several different reasons. But number one, you have a buy the rumor, sell the news type of approach, which means we have a low price on today's candle, this giant shooting star. We have a low price of 108.40. If tomorrow it opens up above 108.40 and then starts to break down below 108.40, my expectations are that it's probably going to try to fill this gap. I don't know if it'll happen in one day, but it'll try to fill that gap, just the nature of price behavior. Why? Because that's behavior analysis. Trading, in my opinion, is easier when you look at it from the perspective of behavioral analysis, not just fundamentals, right? Understand what people's emotions and reactions are going to be doing. When you look at this one, you've got a great day for Disney. Trend has been fantastic. And lo and behold, the ocean itself. Think of Disney as a boat. right? Everybody think of Disney as a boat on the ocean. Yes, they've got their own numbers. They can paddle and they can move in certain directions. But the rising tide of a market is going to dictate where Disney is going to go. It's probably not going to buck the trend too much. Well, if we look at what happened here, and we'll go to the S&P as our reference point, today was interesting for the S&P. We had a huge move up. It was actually starting to form a bullish flag formation. And then today, we've got a fairly negative red candle, right? This tells us negative sentiment out there. This was coupled with several different pieces of information. Number one would be the obvious, which is profit taking from people like me and you who said, man, this market's had a huge run over the last couple days. I'm going to take some profit. Number two, S&P just broke above that 6,000 mark. And a lot of people here going, yes, yes, we've got a huge gain in the market. Yes, we're over 6,000. Yes. And the market's like, yeah, you're over 6,000. Buy all you want because we're taking it back down. Now all of a sudden we drop below 6,000, right? We're at 5,978 right now on the S&P. That might be a bull trap where it traps people into this excitement of 6,000 being broken and then rips back. So that's a negative strike for the market. The other component I'm looking at as a negative piece here is what Jerome Powell said today. Jerome Powell said, I said his name weird, didn't I? Jerome Powell said today. Now, of course, we got to be very careful anytime Jerome Powell speaks because he's the most powerful man in the world. Jerome Powell said, we are in no rush to cut rates. Why? Because yesterday we had a CPI number increase year over year from 2.4 to 2.6%. Today we had our PPI numbers increase as well. Now it was in line with expectations, but you have two metrics of inflationary data showing higher rates of inflation. So we've got two things pointing at higher inflation. You've got a bull trap on the equity markets. You've got a dollar that's absolutely surging and ripping to the upside. I see a lot of stuff here that says bearish moves maybe over the next few days, right? Certainly going into Friday, we have options expiration, so that may change some things. But you have this giant shooting star formation on Disney, and I think that there's negative news coming for the market. You know, this could be a great shorting opportunity. And a lot of people would be thinking, well, Merlin, why? Disney's numbers are good. They're making money. That's fine. I love Walt Disney. I love going to Disneyland, but I'm just trying to make money off the price movements of these items, right? That's the bottom line for me. So I thought it would be interesting to talk just, briefly about your Disney earnings here on how they're a boat kind of floating around. But even though they're looking great, the markets are looking weaker, right? Here's our NASDAQ. Maybe here's our NASDAQ. There's our NASDAQ, right? For the last 4 days, we've been talking about how the buyers have stepped up and kind of supported this market. Felt like the buyers kept coming in. We saw that happen on this first little candle here last Friday, the 8th of November. Long bottoming tail, unchanged for the day. Second day, long bottoming tail, slightly down for the day. Same thing on Tuesday, same thing on Wednesday. Today's different. Today that picture changed, and that was largely, I believe, due to the secondary inflation point and also the Jerome Powell's comments. So basically the market right now is going, uh-oh, we may not get a rate cut in December. That December 18th meeting just shifted. Remember yesterday, I think we looked at this. It was an 87% probability that we're going to get a 25 basis point cut. Personally, I think that if you are going to keep that streak going, 25 is what they should do. But as Bill Addis said on this program and in his bonds program, Canary in the Coal Mine Trading Academy, they didn't meet their objective, right? It's like the guy who's running down the football. If we have football fans here, this is my analogy. This is where the guy's running down the field with the football. Nobody's touching him. He's guaranteed touchdown. It's a 100% guaranteed touchdown. And what do? They celebrate early and they drop the ball before it gets to the end zone. They fumble it before they score. It happened last week or 2 weeks ago in the NFL. Idiots. Carry the ball all the way through. So I feel like this may be alluding to the fact that the Fed has fumbled the ball here. They stopped before they reached the end zone. They didn't adhere to their own plan of 2% inflation target. Yeah, we got to 2.4% on CPI, but now all of a sudden inflation starts to rear its ugly head, and here we go again with the talk track of interest rates potentially changing. So let me show you what we've got here for the interest rate side of things, just so we can see if that, the trip and fall. Even worse, Oliver, I would be fine if you trip and fell before you hit the end zone, but these athletes, they get so cocky that they throw their hands out, throw it to the side, and they flick the ball in the air yeah, I made it. Yeah. They didn't make it to the end zone. Thanks, Margaret. Yeah, this all goes out to a photographer friend of mine, Michael, just a great guy, helped me dial it in. I'll be honest, I was completely lost. I had to buy all kinds of new parts. I bought a new video capture card for my camera, and he just went in here and just started tweaking settings, and I know it looks so much better. I'm very happy with it today, so thank you very much. And again, you know, when I make changes to audio or video, sometimes things happen, mistakes happen. Again, I've got a lot of skill sets. I would argue that, you know, photography is not one of them. So when you guys see changes or things you think I can fix, let me know. I appreciate when you guys give me feedback and your patience and not call me out and be like, hey, jerk, your video sucks. I knew it was blurry, but man, I didn't realize it was that bad. That was really atrociously bad. So Liz says, but if the Fed delayed its first rate cut until it hit 2% target, then aren't they way behind the curve? Rate increases take months to feed through the economy, so aren't rate cuts the same? Personally, I think different. I don't think they should have done 50 basis points. At a maximum, it should have been 25 basis point cut. But you guys might recall, if we go back just a few months, but let's say before they did the 50 basis point cut, what was I saying? I was saying there's no need to cut. GDP numbers were okay. All the numbers looked okay. There were a couple concerning ones with retail sales, right? Retail sales, but that fluctuates wildly. But the unemployment numbers weren't that big of a concern. We're still well below the 4.5% target. Everything looked fine. So why do you need to juice the economy? And we all agreed, and I think right, it's election. It's election. The election really is the piece, I believe, that caused them to start early. They shouldn't have done it. They should absolutely not have done it. There's no need. You only cut rates like that if the market finds itself in trouble and you're like, I need to juice this economy. I need to get it going. I think they did it way too quick. I think it was a mistake to do so. If they did start, should have done 25 and kept on 25. Now all of a sudden, it's like, oh shoot, did we screw up? I think that they did. So let's look at the probability. This shifted phenomenally here, right? This changed a lot. So yesterday was an 82% chance of a 25 basis point cut. Today it drops to 62. So all of a sudden, a lot of people thinking, well, we may stay the same at the December meeting. Now, of course, we'll have to wait and see what the next readings are of CPI and PPI. Those will come out just slightly before December 18th meeting. And we'll see if some of the other macroeconomic data starts to deteriorate before then. But right now, the market is all of a sudden back in a situation where they're going like this. What's going to happen? What are we doing here? Where's interest rates going? And I think that's going to cause a lot of volatility here. I do believe that one of the reasons we saw such a big surge wasn't just the anticipation of Trump taking office and, you know, flooding the markets and helping businesses, but also that interest rates are going to continue to get cut. And as those continue to get cut, that stimulates the economy more. So if that pauses, you know, that further, you know, brings the argument into place of a pullback here. Again, I'm not saying a crash. I'm saying a pullback. So could we get back down to the 20,000 mark on the NASDAQ? Sure, right? That'd only be a few percentage points, which would not be that big of a deal. If we went down to these lows here, which is 20,000, that's 4.75%. We've already rallied more than that. So I think that would not be a stretch by anybody's imagination to think we could get back down to that 20,000 on the NASDAQ 100. When you look at the S&P, that similar low point here, if we're going to try to call apples to apples here, from current levels, you know, that would bring us down maybe 4%. Would anyone in this room, would any of you be like just shocked if we fell 4%? I don't think you would. Right? It's would be a natural pullback here. Granted, it would be a big one. It would have just have erased the outcome of the Trump victory. Again, we'll see what happens when he takes office. Mick says, buy. I think that this could actually be a great buying opportunity. I, for one, am hoping the markets sell off. I'd like to see them drop lower. Allow me to buy into some of these positions that I'd like to own long-term at depressed values. So, for example, I did not do anything with Boeing today. It's still on my radar. I'm keeping an eye on that one because I would like to own some Boeing. I really want to own Boeing because the premium is pretty juicy for Boeing. And if I'll sell those puts and get exercise, excuse me real quick, I gotta sneeze. Almost sneezed. Almost got it. If we see a market pullback, and let's say I get a 5-10% correction in prices, then it'll allow me to buy companies that I like to own, like I mentioned, like going into Boeing. And I know Boeing's got a lot of problems. I mentioned my apprehension on selling puts on Boeing just because of their most recent earnings. I mean, that's one of those ones. I think there were several people in here that took a double take when we looked at those numbers, but I mean, they lost $10 per share. That's crazy to think. I mean, that's just such a monumental miss there and just losing so much money. So there's a bunch of other companies. So Oliver says, buy some Tesla. Yeah. The question is, how do we get Tesla down to a very low valuation that I'm comfortable with? I mean, just back here in October 23rd of this year, Tesla was $211. We're currently at $311. Do I think we're going to fall 100 points over a 28% slide in Tesla to get down to where we are right now, or where we were in October? I'd have a hard time seeing that come to fruition. However, that's a nice transition, and thank you very much for that one, Oliver. Again, if we do see market sell-off, find companies you'd like to hold long-term, maybe sell puts on those to generate some premium. If you get exercise, sell covered calls, rinse, wash, repeat. Now, the next piece here, which Oliver said, buy some Tesla. We had talked about areas that might suffer, areas that would do well, and areas that would be impacted. Now, when I did that show with Larry Jacobson, I wanted to be good and just focus on the positive side of things, right? That I think important to do that so we don't dwell on the negative. However, when we finished that conversation with Larry, I believe the next day, I did bring up some negative points, and one of those was the EV space. And we talked about the Trump administration making it pretty clear that they want to get rid of this $7,500 tax credit for EVs. And I was perplexed as to why Tesla was surging like crazy, knowing that this is probably going to be removed, that we're going to get that $7,500 tax credit taken away, which could seriously impact their business. Now, the good news is, for Tesla owners, is Tesla has passed the hump of trying to become profitable. Earnings statement, you can see the last earnings statement, they made 72 cents. They were supposed to make 59. Before that, they made 52 cents. So, they're making money. It's not a problem. The issue is, we kind of knew that. You said it was taken away. So now I'm seeing a spinning wheel on my screen. So now we see, further confirmation from sources that that's going to happen, that we're definitive it's going to be removed fairly quickly. Okay, so who's that hurt? Well, you saw today Rivian, which was up massively yesterday. Just a giant day yesterday. Look at this about face on Rivian. It was funny because yesterday I was a little upset. I was like, oh great, my Rivian shares are going to get taken away, but whatever, I'd still make great rate of return. And I said in a perfect world, I'd love it to close at $11.49. $11.49. Well, I don't think we're going to get that, guys. It's way lower than that now. Rivian got absolutely butchered today, and the predominant reason for this was because of those tax credits being taken away. Why? Well, look at Rivian. Rivian's not making any money. So if you take away those tax credits for Rivian, it puts a lot more pressure on them to survive, right? And the question, Judy, refresh your screen. Oh, I guess if you can't hear me, it doesn't do me any good to tell you to refresh. Other companies like Rivian or Lucid, right, getting just crushed. Here's Lucid's recent earnings. I mean, they're losing money. So any EV company that's not in profitability already, this is a major, major piece. And I believe that Elon Musk even made the statement, this could be catastrophic for companies that haven't turned that corner yet. The only one who's really done it is Tesla. So, I think looking at it from the big picture, I think Elon Musk is like, go ahead. Remove the tax credits. We've already turned that corner of profitability. And will it take away some of Tesla's sales? Sure. I'm sure it would impact them a little bit, right? Add that 7,500 to Rivian loss per car. Exactly, Mick. And that's why we saw the big drop today. Now, the other side of this, which I think is really important to understand, is, so Lucid, I think that's a lost cause, right? Lucid, chart looks awful. They're looking like they're going to go to zero. Now, what about Rivian, right? Of course, I'm biased. In full disclosure, I have a lot of Rivian right now. Their deal with VW, I think, is what saves them. They got I think it's a $5.8 billion. But a lot of really tied together development and cost absorption in the production of vehicles and technology. When you've got a juggernaut like Volkswagen on your side, I think that helps your chances for success significantly. So this, to me, puts it in a very close second. Not a close second, excuse me, a second place to Tesla. And then Lucid, who knows what happens with Lucid. You've got NIO, who's not going to get any tax credits, and they're a Chinese company. This is another one that could continue to just get beat down and down and down. And of course, you've got Go EV, which is American made, but that one's just falling apart and probably will end up going to zero in bankruptcy. So it's a tough spot for these EV companies to be in. I'll let you know what happens with my Rivian tomorrow. My guess is it's going to close somewhere down in the 10s, so I'll probably sell those 1150s again. I'm going to try to do them weekly just so I can kind of speed up. I'll speed up the rate of return on Rivian. It'll be smaller per contract, but it'll be shorter time. Liz says, didn't Musk say that the removal of the EV credit wasn't an issue for Tesla? I don't think he said it was not going to be an issue. He said it will be impacted, but it's not going to be that significant of an impact, right? Because again, they've already turned that corner. What he did say is how devastating this could be for competitors, those that haven't turned that financial corner. I mean, it took Tesla a long time to get there. It almost feels like this is a strategic move, right? Because if Tesla's already in that position that they're not burning through cash like these other companies, then they have flexibility with what they can do. With Rivian, with Lucid, with NIO, with Go EV, you're looking at companies that are strapped for cash. And if now they lose an extra $7,500 per vehicle because they're not going to get that tax credit, you're going to lose customers. And that could hurt them down the road. So I don't know which way this one's going to go. Yeah, what about Canoo? Yeah, that Canoo is Go EV. I love Canoo, the car, but the chart looks bad, like real bad. I'm lucky I caught this pop right here. We had talked about this and we did a whole show on it. And I was talking about right around the dollar. I bought it at $1.31, dumped it out here for 100% gain in a fairly short window of time. But it just, the question for Canoo has always been, are they going to go to bankruptcy? Hearing what the current CEO is doing and what he's spending his money on, his private jets and just living lavishly, it doesn't speak to me of success. It just really feels like Go EV is probably going to get lower and lower and lower and lower. Steve Wallace says, almost seems like government should stop meddling in private businesses. Go figure, huh? Get the government out of there. Well, the real question would be, and I don't know the answer to this, it's all subjective, is would Tesla have made it? Would they have survived? Would they have turned that corner of success if it wasn't due to these tax subsidies and other, grants that were given to them by the government? Probably not, right? So there was that initial help from government to get them started, and now Tesla is legit on their own. They don't need the government help. Other companies still do. And I think that's the big problem. And we'll find out. I think when Trump takes office and those tax credits do disappear, you could see a lot more pressure on these EV companies to the south side. That's unfortunate. Go EV will be a penny stock. I think it already is, Oliver. If you go EV, the general consensus is anything under $5 is a penny stock. So this one already is there. It's a 53 penny stock. They'll probably, what they're going to have to do is do a reverse split. And you guys notice that they did one recently. I mean, they did one already this year. They did a 23-for-1 reverse split. So for every 23 shares, you now got one. And my guess is, when you do a reverse split, a lot of people think that's positive. It's not. It's a very bad sign. A reverse split means your company's in bad shape and you're about to be delisted. And you got to do that reverse split just to stay alive. Given how long this one has been down at this valuation, my guess is Go EV's on the timeline, meaning that they're about to be delisted. So what will happen is they're going to do a reverse split. My guess is at 60 cents, you're probably going to get something like a 30 or 40, maybe 50 to 1 reverse split here, just so their valuation looks okay and they don't get delisted. But yeah, unless they turn this corner, those tax credits, Go EV might just disappear. Unfortunately, because I really like their car. I think it's one of more unique vehicles on the in development. I know there's some on the road, but unfortunately none around me. And what else did I have? I had this graphic set for today, which was talking about market uncertainty, and I think we've already covered this. Right now is today was an interesting day. We really don't have any clear sense as to what's going to happen. We do know we have a change of administration coming, but that's months out. We do know that the markets have been incredibly bullish and now all of a sudden starting to roll over. I look at this as someone who, just as I just mentioned, I'm more of a technician. I like to look at the technical side. It would not surprise me in any way, shape, or form that over the next couple of weeks, the S&P closes this gap. Now, just closing that gap is not that big of a deal. Let's be honest here, right? This is not that big of a deal. If the market were to do that, that's a slide of 2.8%. No big deal whatsoever. And that would maintain its current uptrend. The question I have when we get there is, does it break it, right? Do we start to break this uptrend? Because I think a large part of this has been fueled by rate cut talk and rate cuts actually happening. Now, all of a sudden, those might get shelved. This could start to roll over. Now, to add further, and I know what's going to happen here. Oliver's going to be like, here comes Merlin with his doom and gloom. I'm not. I'm just spitting facts, brothers and sisters. You look here at the dollar index. I mean, again, this is putting a lot of pressure on these markets. Look at that, 5 days in a row of almost identical candles. This is a huge run for the dollar index here. Now, where is it going to stop? Well, no one knows that definitively, but we do have this pocket of kind of sideways double top action that went back to October of 2023. Well, we're there right now, right? I'm going to put a line right across the high point for today, just so we can take a peek at that bad boy there. Boom. Okay, we peaked out at 107.06, right? So the target was 50-cent increments, basically going from 105 to 105.50 to 106, 106.50, and we pretty much did that every day. It feels like this move up was 50-cent clips up per day in the purchasing power of the US dollar. Now, this is great for anybody who wants to travel. Maybe I'll take some vacations here soon, but notice where that red line hits around the top. We're right in this one. Anything higher, we've all of a sudden started to see a lot of open space, which could take us all the way up to about 110. I assure you, if we go from 107 to 110, there's going to be a lot of talk about market disruption and how this is going to hurt the market. So just keep your eye on this. Again, I'm not trying to be a purveyor of doom and gloom, Oliver. I know you like to throw that one at me sometimes. You're like, you're a doom and gloom guy. I'm not. But there's no arguing that this dollar is going to have an impact on the markets. Anybody who knows economics and the impact of the dollar is spot on in thinking this is going to hurt our markets. Now remember, this rising dollar typically means rising yields. Now we had the new session is showing slight increase. We're at 0.18% in the new session, so really the last 2 days have been kind of choppy. My feeling, I thought we'd actually have a little bit of a pullback from this kind of 104.50 mark. I thought we'd have a little pullback and then surge back up in the yield. We shall see. By keeping the rates unchanged at the next meeting, that does put a little more pressure on higher rate increases. So again, a lot of unknowns, a lot of data and stuff being thrown at us with no real clear direction, which is why I love the graphic of this guy. You know, it does, that face just screams of confusion, of maybe disgust. And again, today's market was nothing to be that disgusted about. I mean, if you look at our numbers here, I'll run through the overall. And your worst performer there was Bitcoin. Again, that's long overdue for a correction, in my opinion. I think that there's definitely a correction coming here long term. I'm still very bullish. I did post a poll to see whether we would be over. I'll bring it up here for you guys. Whether we'd be over 100. Would we reach 100,000 by Thanksgiving? That was the poll, and I will bring that one up because I didn't see the end result. Okay, here we go. So there's your end result of it. 75% said 100%, 3.6 said not a chance, and then the I don't cares were at 21.4%. Now, I don't know whether that was 21% of people saying, I don't care, just do what you got to do, which is where I would actually put my vote. I don't really care. If it gets 100,000 by Thanksgiving, awesome. That'd make me pretty happy. The 250,000 by next November is far more important, and that is really more of a technical plan for me that I've got in place, and that's what I want to see. I want to see the 250 or higher. And I'm actually working on a presentation right now for bar chart. You guys might remember about a year and a half ago, I did a video talking about my forecast for the future of Bitcoin and where is it going to go, the road ahead. And that target is where I kind of came up with my $250,000 price target for November of next year. It ranged between 176 and I think 370. Given the circumstances that have transpired with this election and the House of Representatives and the Senate and what could happen to Gary Gensler, I actually think we're going to be higher than 250. I really think adoption is finally going to happen in the next couple of years, and we could see significantly higher. So I'm still going to stick to 250, but I'll be honest, I think that's a low end of the spectrum there for Bitcoin. All right. As a Tesla fanboy, the answer is no. They needed that help loan during the Obama administration. Well, they needed to get started, right, Kenny? I mean, that was a massive capital expenditure to get Tesla up and running and get going. They used that money. Great. They got their operations set up, struggled for a while, right? They're underwater. If you go back to this show you could actually go back to Power Trading Radio in like 2015, 16. People were asking me all about Tesla and what I thought about it. I said, I'm not touching it. The debt is huge, like a monstrous debt. I didn't think they were going to make out from underneath that. I did not think they were going to turn that corner. And look how wrong I was. Now, all of a sudden, I'm a Tesla fanboy for all the future products here. So without that government help, without tax credits, I don't know if Tesla would have been what they were today. And now Elon Musk, I think, is probably... You ask yourself, do you want to continue to give tax credits to EV companies, which will help... I'm putting put yourselves in Elon Musk's position or Tesla's ownership position. If you continue to give $7,500 tax credits to companies to all of them, then you increase the potential competition. But if you're already the lead dog out there and you're already self-sustaining without those tax credits, if you get rid of those tax credits, your earnings drop a little bit, but you crush your competition significantly. So the PE was 3 digits. Was it 3 digits back then? That's getting up there. That's getting up there. Steve says, I don't like subsidies of much of anything. However, I read that the oil company is still getting $500 billion per year subsidies. Doesn't seem like they need it. They don't. But if you look at a lot of the people that Trump is appointing, like one of the guys is the CEO of Continental Oil. I mean, there's a lot of people getting nominated that you kind of raise your eyebrows to and go, really? I see a conflict of interest here, but hey, all I have to do is react to the prices of the stocks and time will tell what happens to the economy and the markets. But yeah, I'm not a big fan of subsidies either. I think you create disincentives for people to work harder or to get things done to solve problems. Like, oh, I know I got $500 billion coming in. Great, bring it in. Doesn't work. Let's see. Marcus says, does this decrease the chance that the USD will be replaced by reserve currency worldwide? Well, look, I actually thought about doing a show just on that one. I personally don't think the dollar is going to be replaced. And I know what many of you are thinking. Many of you are looking at historically going, a reserve currency of the world lasts about 100 years, right? That's kind of the lifespan. And here we are at 100 years for the US dollar. Realistically, you've got to look at it and say, what's going to replace it? And, in a very quick nutshell here, I would say, I don't see anything replacing it. Fiat governments, fiat currencies of the governments has been the fuel for economic growth. If you look at the United States, we're one of the largest in the world, most powerful, biggest military. We're an economic powerhouse. Where's that coming from? Spending. It's coming from continually spending beyond our means, printing money out of thin air, and a fractional reserve banking system that allows us to take money. I can take $1 and I can lend out 99 cents of that. That customer deposits his 99 cents. I take 98 cents of that. And all of a sudden, that $1 could be thousands of dollars. So it's this quasi-Ponzi scheme, in my opinion, which is necessary for growth and economies to grow. But it's getting to the point it's getting stretched a little bit too thin, that if we can't make our financial obligations, there may be some problems down the road. But we will continue to print money regardless to pay those debts and service our debt obligations. If it's not the dollar, who's it going to be? Is it the euro? You got way too much disorganization between those countries. When I went to Italy, I was interviewed by a Spanish station. What I thought about the euro was 2001 when they finally switched over and took away the other fiat currencies and replaced it with the euro. And they asked me, what do you think of the euro? And I said, as a consumer or as a student of economics? Because I built a trading class for them, or trading school. And he says, as a consumer. I said, as a tourist, the euro is the greatest thing ever. It's awesome because before the euro, I was like James Bond. I had a little accordion file, and I got my Deutschmarks, I got my Swedish kronas, I got my lira, I got my drachmas. Where am I going today, Mr. Bond? But as a business person, I think it's terrible, terrible. You look at the German work ethic. The Germans are work. They're serious. They don't joke around. Let's get business done, and it's very precise. Whereas you go to southern Italy. I get to work. I go smoke a cigarette. It's time for a pause. You go to Greece. They're taking half days. The work ethic is very different. Nothing to take away from the Italians or the Greeks, but you have a cultural difference. And bringing together cultural differences We've had a hard time with that just in the United States. It's far more diversified over in Europe when you have countries next to each other, next to each other, next to each other, all with different languages, cultures, behaviors. I mean, good luck getting that euro to be the world reserve currency. So they're out. Then you look at what some of you are going to mention next, which is the BRICS, right? Brazil, India, Russia, South Africa. Do we get them to collaborate together to create a currency that becomes so popular that the world uses it? Now, that's becoming a more and more plausible alternative because more countries are joining those BRICS. You got the initial BRICS, but now there's other countries joining it. I still think there's a lot of trust issues there that may not be easily resolved between Russia and China and India, Brazil. I mean, I don't know. That's a lot of mistrust there, or distrust in between those. So I don't think that it'll take over as world reserve currency. Could it be something that eats away at the dominance of the dollar? Sure. I think our dominance will start to drop, but it'll still be the most widely used currency in the world. Now, what would cause people to move away from fiat currency would be lack of faith of governments, which I don't have much faith in governments, period. If we have a lack of confidence and faith of the governments, then what we're looking for is something that's asset-backed, a gold standard, a gold dollar. And there is talked about an Islamic dollar that is going to be backed purely by gold. That might be something because it's truth, right? It's actually backed. However, I don't know if I trust it. Because if I don't actually see the gold and touch it and understand exactly where it's at, I don't believe you actually have it. So where does that lead us? That leads us to my fourth option, which would be something like Bitcoin. Now, Bitcoin is 100% auditable, so we know exactly how much is out there, where it's all at. It is a potential, right? As a measurement and medium of exchange for the world, it actually would serve the purpose. It would do fantastic. And you could trust your governments, right? If the U.S. government says our dollar is backed by Bitcoin, we could all look at the account and see if they have enough Bitcoin to verify that. We can't do that with gold. Can't do that with silver, right? Oh, yeah, we've got gold in Fort Knox. None of you have ever been to Fort Knox and been in the vaults and seen all the gold. None of you. You've seen a picture maybe. So, crypto sounds great for that, especially like a Bitcoin. However, there's no way on this great green earth that a government will give up their power to print money. That's how governments grow. That's how we fund our military. It's how we afford so many things in this country, is spending money we don't have. So if you're saying that Bitcoin's going to be the currency, which I hope it does someday, because my position in Bitcoin will be worth millions and millions of dollars, there's just no way a government would be willing to give up their fiat currency and their ability to print more money to fight wars, to solve global or to domestic recessions or economic growth. All that goes away if you're stuck with Bitcoin and you can't manipulate the money supply. So what replaces the dollar? I don't think anything replaces the dollar. I think what happens is the dominance of the dollar declines and other currencies rise up. I do think that the BRICS are going to, become more powerful and start to do a little bit more together collaboratively, but still think the dollar is going to be the main one. Anyway, that was a big rant on that topic there. Let's see. I didn't see it. Oliver says he just announced RFK Jr. was health and human services. Keep an eye on health sector. Yep. That'll be interesting. Look, some of the appointments are very interesting. We'll see what happens when he finally takes office, but I'm interested. Policy, no more COVID vaccines. EU is a bunch of totally diverse countries that can barely agree on the stuff as it exactly is. That was my point, and I love Europe. I absolutely love it, and I think that's part of the charm of Europe. I think many of you would agree that part of the great thing about Europe is I can go to Germany and I can very quickly get into their culture. I understand how they operate. They don't really joke around. They're very precise. Their trains are always on time. You know what the cuisine's going to be like. And then you get over into Spain and you got like siestas and things are very different and people are late all the time. Got a more laid back culture. I love that. I love that you can just cross a border and all of a sudden things change. We kind of have that here. You go to Boston, they're talking a little bit different and the culture's a little bit different. Let's see. Do they have to have the gold or would it be all the gold? Would it be gag? So that's the thing. There's not enough gold in the world to back 1-to-1 a fiat currency. I'm not sure what the exact total market cap of gold is. I could look that up for you, but I don't believe there's enough gold in the world to fully back the U.S. dollar, the dollars in circulation. So even In principle, it wouldn't work. It'd have to be fractional. European diversity, first game many times, or seen it many times. I will be back there again late December, early January. And you might be a good time to go, Liz. Let's go look at the Euro USD right now. Let's go take that Euro. Boom, look at that. That Euro could be back at parity by the time you get there. This is lovely. All right, this is great for you. Hallelujah. Go to parity, drop. You can see last time when I went to Europe, it was back here when we were actually sub-parity. It's when I went to Oktoberfest. This is a great time. But yeah, it's great. Let it tank. Your trip to Europe, you're going to get a lot more bang for your buck for sure. I mean, if you look at just what's happened in the past couple of months from the purchasing power of the euro against the dollar, you has declined from peak to trough here. You have dropped 6.4%. You know, that may not seem like a lot, but that means that you can buy 6.4% more stuff over there. It's awesome. Love it. Love it. So yeah, I hope you have a great trip. And I hope it keeps falling by the time you get there. When you're going to go late December, early January, yeah, let's hope for parity. Cheering for parity for you. All right. That's pretty much all I had for today. Again, SMC, I was kind of laughing because I told you yesterday that I got jumped ship on this one. And like I said, it just was bad. Luckily, I did it because we're down 11.41% today and another 1.6 in the after hour. I mean, this thing could be at $10 by the end of the day tomorrow. And it really just, to me, it just screams of being delisted. So I took a chance on that one, ended up losing a couple $100 on it. So not the end of the world, but I'm very happy I'm out now. Rivian, we will see what happens with all the Rivian shares I have. The news today of removing those tax credits crushed it. Just absolutely eviscerated all those gains from yesterday. It's crazy to see how big of a swing that was. From the peak yesterday to where we closed today, that's a 21.3% move. Pretty crazy. Show your crypto charts. Well, I don't show my portfolio, but I mean I can show you crypto charts here. There was let me go back here to the changes. Obviously, when you have these big moves up, you're gonna have big moves down. Now, Ripple is one that continues on up. So for all my friends and those of you out there that think Ripple is the greatest thing in the world, great, good for you. I mean, I still own Ripple. I still have Ripple, so I'm okay with it going. I think there's other competition that's gonna do better. I also have a bit of Litecoin, which is surging out there today. And you can see a lot of meme coins. You know, this Pepe, which I've mentioned many times, is just a scam. This is an absolute joke. So is Hex. You know, a lot of these had good days today. Now you look what Bitcoin did. Well, let's start with Solana. You know, you've had this huge rally up in Solana, which I know a lot of people are talking about. People are very optimistic about Solana. And I agree. It's my number 3 holding at this point. And I definitely think that there's some big upside potential here for Solana if they continue to build their ecosystem of products and services on Solana. Then you have, what did ETH do? There's your Ethereum. So a little bit of a pullback here in ETH, but again, all in all, not too bad. So a bit of a correction here in these crypto markets. There are some that plummeted pretty significantly. Cronus, which had a giant run up, and as typically happens, as you get these huge surges up, you get big profit taking and downside moves as well. So we saw that happen here with Cronus, which is crypto.com. I do have a little bit of crypto.com, but I would stay away from it. Yeah, SWI is one I've been talking about quite a bit. You know, this is one of the newer blockchains created by the team, the former team over at Facebook. So remember, it was Facebook Diem, or it was Facebook Libra, and then it got all kinds of regulatory issues. They switched it over to Diem, and then they scuttled the whole project, which I was kind of surprised they did. That team split into 2 separate teams. Part of them went over and started SWI, which is the chart you see here. And then the second half of them went over to a competitor called Aptos, APT. And here is Aptos. So SWI is definitely looking better. There's Aptos kind of longer term for about a little over a year. And I'll show you what SWI looks like that same period of time, SUI. So SWI, you know, you're talking blockchains that do over 100,000 transactions per second. And again, this is the 4th generation maybe. It does parallel processing of transactions, which allows for mass adoption and growth. So SWI, I think, is definitely a good play here. It might be a little late at this point. I mean, we were down at 48 cents back in August, and now we're at $3.40. So yeah, this one's looking pretty darn good. But there's a lot of projects out there with great potential. You know, Near Protocol is a good one. Render's been doing all right. So yeah, it's no, not World Liberty. I'm not even going to go there. That is a scam. That's a fraud. I'm 99% sure that is a rug pull. It's going to come crashing back down on people, and I feel sometimes, you know, Trump's a big boy. He can make his own decisions. But sometimes, the promise of making a ton of money can backfire on you. And I think that this is one of those times. I think that World Liberty Financial, granted he controls the House, he controls the Senate, so the damage might not be that significant for him. But if it does turn out to be a rug pull, and a rug pull, for those who don't know, is basically you get a bunch of investors to buy into your project and they don't deliver on anything. It's just going to be vaporware. And even if they do build out something, it's not going to go anywhere. It's not going to compete with Uniswap or SushiSwap or Aave or Compound or Maker. I mean, there's dozens of companies doing exactly what World Liberty Financial is doing right now, and they convinced Trump to put his name on it, and hopefully it doesn't come back and bite him. Like, I think it might. It's a pretty shady thing, and they're not showing you anything either. Their website is just put money in, and we'll promise you the world, the greatest thing ever, DeFi. All right, that's going to do it for me. I'm going to wrap things up here on that note. Tomorrow, I have no guest. Just so you guys know, I know many of you like me to bring on guests. So I because of the relationship with Trading Academy, I'm not bringing on outside educators. If they're Trading Academy one's fine, but I don't want to bring on competition because that kind of takes away from Trading Academy. And the other part here is I receive at least one request a day for people to come on this show. So somehow, and I'm happy that this happened, but I have not accepted one of them yet. So what happens is some staffing agency somehow got my podcast and this show and has been asking people they've been asking me to bring all these different people on. I'll let you know that I'm vetting every one of them. So when they say, oh, this guy, he's a real estate investor and he's got portfolio stuff that he wants to sell, I go and look at him, and all of them so far, I've just said, nope, I'm not bringing them on. If I do bring someone on, just understand that I'm not vouching for them 100%. They're usually people I like and I trust, especially if it's old. Like most people I brought on have been all old online Trading Academy people. I've worked with them. I've seen them. I know they trade. I know their style. I like how they teach. Some of these other people that I may be bringing on are going to be unknown to me. And I'll have to put a little disclaimer on the screen here. Like, this is not an endorsement of this person in any way, shape, or form. It's more of information gathering and kind of, see who these people are. So when I bring those guests on, I'll let you know. But to this point, I have really, really been just blocking everyone. Not blocking, but just saying no, kind thank you to all of them because they're all selling something that I just don't know or don't trust. Ryan Watkins is ending his school. It's tough. I tell you what, it's a real tough business. Is Jared's Army okay to bring on? Is this the option guy? I'll ask. I told the new powers that be that I wouldn't do it because now my loyalty, my faith, my 100% of my effort is going to be for Trading Academy. I want to bring this back up to the glory days that we had, where it was all about student success. Having big events and conferences and building just a massive community, and that's going to require a lot of effort. And I don't want to dilute the attention from our instructors. Unfortunately, a lot of our instructors that we have are very quiet. They're very shy. Once you get them in the classroom, they're great, but on camera, on microphones, they just don't like it. So I'll try to bring some more of those guys on. But Ryan will be a fund manager now. Is he? Can be a fund manager? Seems like what everybody's going to do, being fund managers. All right. Anyway, I just wanted to tell you guys that about the guests. I do want to bring guests on, but I'm being very, very picky about who it is. Very, 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 very picky. I'm worried that I'm going to bring on somebody and then you're going to, reach out to them and subscribe to their service or invest some money in. Because I don't know them well enough, it ends up being a scam. I guess I'm just being overly cautious. Jordan Matthews is great. He is really great. He's very nervous about coming on the program. I'll try to bring him on. I think I could bring on Justin. Justin is not a direct competitor, right? We don't do, long-term financial wealth management. We don't do that type of stuff. So we do have a strategic investor program, which is how you do it yourself. But as far as money managers, we don't do that. Have no interest in being money managers. So yeah, I can bring Justin on. All right, guys, that's going to do it for me. Just wanted to let you know. Thank you for the input on the video. I'm glad it looks better. I'm glad it's sharp and clear image. Again, Michael, thank you very much for helping me out. I appreciate that. That said, if you have anything you want me to discuss on tomorrow's show, tradermerlin@gmail.com. I hope that you learned something today, found it enjoyable. If you did, hit that like button, and I will see you all tomorrow. Take care.